Happy Friday, traders. Thanks for joining me again on another Friday, and happy month of June. It's a new month today. Non-farm payrolls came out about a half hour ago, and pretty bullish number, but the market sold off. We have Fed's Kashkari releasing comments about employment and other things, not affecting the market. They hardly ever do anymore. But the market responded by selling off a little bit in equities for obvious reasons. And currently, the market stance is allocation to risk. The leader this morning is the Euro Stoxx up 1.58%. The DAX is up 1.32%, followed by the Russell, Dow, the S&P, and the NASDAQ. The products that are down this morning are the safety assets. The bonds are down a handle and 13 ticks. Big. Japanese yen. Crude oil is also down. Crude's in a downtrend. Has pushed to around 67.34 at the high and is trading at 66.08. A swing of about $1.26 or so. Crude's been interesting. It's been a better mover than the S&P, but with news flow and with all this stuff, it's not all that easy to predict its movement. But we did push back in crude to the mid of the full session and are pulling off. So at least it's a little bit orderly. Looking at what is driving us this morning, as I said, the non-farm payrolls came out. The surprise was the unemployment rate dropping to 3.8%. We have not seen that low an unemployment rate since April of 2000. If you recall, April of 2000 or late March of 2000 was the top of the dot-com boom. And it was all downhill from there for the big .com correction. We're seeing the same number. Non-farm payrolls came in at 223,000 versus 190,000 expected. Hourly earnings also ticked up. And Kashkari commented that seeing signs of wage growth that are slowly picking up and expecting those to continue to pick up, which supports the thesis that rates will continue to go higher, and I believe that's what the market's responding to. And you see that reaction in the treasuries this morning. So that's the lay of the land. What is left in front of us? We do have several numbers coming up. We have PMI, U.S. PMI at 9:45 Eastern. It's 15 minutes after the open. We have ISM manufacturing at 10, along with construction spending. And then later on, Baker Hughes rig count at 1 o'clock Eastern. And that brings us into the weekend. So that's where we are. As far as what was expected yesterday, I didn't, because of the non-farm payrolls, I didn't really have much time to put everything together. But the expectation yesterday was that we would tick up to 27.2350 and then sell off and take out this flagpole, this thin part of the profile. That part shows up as single prints on the on market profile, which is where's my market profile chart? Let me pull that up. 1 second. Not sure why it's not there. Here it is. Oh man. So here it is. You can see here from Wednesday's action, we have this thin part. We bounced in the morning. We had this very thin profile. We had some singles all the way up and down, and then we balanced at the top. And you could see it in volume here, very thin. And that the primary scenario yesterday was to fill that in. And where is my chart? There we go. to fill that in and push all the way down to 2708.75. That's and then for the bounce. Here's what actually happened. I'm not going to cover the other scenarios. Just don't have time. Here's what actually happened. Ooh, that's noisy. Man. Volatility has been pretty good. Here's what actually happened. We could not do anything to the buy side from the open. From the open, we had a delta that was negative, and we only were able to only get one uptick from the opening print before the selling began. It was an open auction in range, and it was a grind down, and it finally got to its target down here before the bounce. The bounce, the target put us neutral. It put us on a range extension down. So that set up the selling of the mid area against the stock zone. But the market had other ideas and it went neutral. Pushed to 27.2250. It missed the 27.2325 point of control. And then it rolled back over. This is on news. And it rolled back over. And then we ended up taking out the prior day's low, which is just unusual for us to make this turn, rally, and then we end up taking out the low of the rally day. We've often tested the points of the high volume nodes of a rally day, but we haven't really seen it go back and take out the low of the rally day. So the overnight session carried forward and has had a pretty decent range. Let's look at the overnight. I have it set to 1 minute because I was trading off of it. Switch back to 15. There we go. Pretty good rally on the overnight session. From the time we opened, we pretty much are long inventory all the way, just completely sideways with an upward skew. And the Europeans begin, and off to the races we go. And here's non-farm payroll selling off before finally turning. My view on the non-farm payrolls is any number that beats is likely to take out the high. The market actually hung out near highs. Let's go back to the 1 minute. You see how that's set up. I was managing a long. Took 35 minutes to fill. Here we are. You can see that we are just leaning up against that high all morning. We've got pretty good volume up to that point. We added some more volume. We had about 170,000 coming in, and now we're at 204,000. And the reaction, the SOC is 27.1875. That's where the auction stopped, and it was interrupted. And then we see a reaction down, impulse down, continuation, and then a grind back up. We finally take out the overnight high in this multi-distribution profile. Right now, 27.14 is key again. It was key a few days ago, 3 days ago. It's key again. It is basically the low volume node or the split between the two main distributions overnight. Again, the profile looks pretty healthy. We have a weak high currently. It's likely to keep pushing that high. After all, we did get good non-farm payroll numbers. If you're in convergent trading in the Head Traders channel, I posted the last 3 months or 4 months of non-farm payroll releases with the expectation versus the actual, and you can see how the market responds when that there's a positive bias or a long bias to the market. You can see how it responds when the numbers miss, which it did by a lot one of those months, and when the numbers are good. In either scenario, we do get a blip down, and then we eventually start to move up. That's what we've had for the last 4 months or so. All right. So this is where we ended up yesterday. Our point of control is down at 27.0550. We closed right on top of the point of control. This is where we are this morning. Where are we? Right up here. Okay. And so we're on the edge of yesterday's trade. We have basically done a small gap in range, traded this scene now for 2 days, overlapping trading. So it's time to put up a micro composite to see what the combined auction looks like. This, by the way, this point of control was pretty crazy yesterday. It was a 3-tick. I don't know if you watched the cash close, but I'll show you what it looks like on a Renko chart. Look at this thing. It's pretty insane. It traded 3 ticks, and it traded 130,000 contracts in those 3 ticks. And so it was just, and this is kind of an end of month algorithm of some sort, or battle of the bots or something. And what we end up with is an extremely sharp point of control right at that 27.0575, with a huge number of contracts traded extremely rapidly. Look at this. Look at the rotations. Look at the delta. It's just very, very fast, two-way action. Just very, very strange, and it kind of skews how this multi-day profile looks. And that's really my point. This multi-day profile had a point of control that was up here, and now it's skewed down here, so it messes up how we're looking at the profile. But in either case, the market is moving very swiftly towards that 27.2350 up here that we left behind from Wednesday, and that's where we are right now. Before we get into this, I want to take a moment and remind you that it is Like Friday. Please find and hit the like button. It's really important that you take a moment and do that. It does require you to log into your Gmail account or YouTube account to do so. I'd appreciate it if you did. So looking at today's plans, let's clean this up a little bit. Looking at today's plans, we're opening in this double stock zone area. The expectation is for an open auction that's likely to drift down a little bit. I'm looking for an impulse through the 27.2350, consolidate, and I'm looking for this continuation higher into this double stock zone, and we're back to the 27.3250, and we're likely to continue to target 27.36 from a while back. So that's the primary scenario, looking bullish. The numbers are good overall. Not too much holding this back, in my opinion. We do have a gap from yesterday's action. Okay, so we have a gap, and that comes into play in the second scenario. The second scenario is an open auction that tests higher, pushes through 2350, gets an impulse down. If I see an impulse down through the opening swing, then I'm shooting for 27. The 27.11 initially. We have pretty good support here initially. Consolidate and then look for a retest 27.0550. Consolidate, pop back up on the close. I'm expecting this to go dead with the European session. It is non-farm payroll. It is the summer into the weekend. And so those are the two main ideas. Hey, you're awesome. So you told us it could go up or it could go down. Yes, it could always go up or down. My scenarios always cover up and down because that's what the market does. The question is, what am I looking for in order to participate for when it goes up or when it goes down? So I never come in with this strong single-sided bias, because all that does is it costs money. And so I come in with the idea that if it does consolidate and it starts to push higher. We don't get the impulse down. We don't push through the opening swing low. We don't break the IB low. Then I'm going long, and these are the areas I'm cautious. I'm going to scale out of, ahead of 27.30, 27.30, 250. I expect it to tangle in that area so I don't get frustrated and micromanage my trade, because that's a double stock zone area from prior support resistance. And then my key target's 27.36, and that brings us back into balance. So we are opening right in the middle of the MC point of control from February and the MC point of control from May 10th to May, whatever it was, earlier this week, I guess. And so we have to understand that the open auction could take a while for it to play out. Now remember, every time we're up here, every time we're in this area, we get this consolidation. Why? Because the market has shown us that for 4 months today, I guess, it has really liked 27.20. It has seen balance at 27.20. How do I see that? Do I see that from the candlestick formations, from all these other things, price-based things? No, I see it from the volume profile. The volume profile tells me that the market likes this area. Very, very important to understand that the auction is seeking value, and once value and balance are regained, we're likely to consolidate in that area, so why get frustrated? That's really the point of these trader bites, to get your mind in the right place. Good luck today, and have a great weekend. Watch your losses today. Watch your losses, okay? Take care.